Hey, how about a little housekeeping to start things off? Let's go with our disclaimer. Um, Black Lion Investment Incorporated, Black Lion Investments Incorporated, and Black Lion Foundation, as well as Black Lion Inc., is dedicated to helping you understand the world of investing, removing any fears you may have about getting started, and helping you understand many different investments and strategies to enhance your knowledge and decrease the wealth disparity. Our goal is to help you take control of your financial well-being by delivering solid financial education and responsible investing strategies. However, information contained on our website, YouTube channel, blogs, and Zoom channel, and other immediate outlets are for general information and educational purposes only. Black Lion is not an RIA. This information is not intended as a substitute for legal or financial advice. The business of investing is a complicated matter that requires serious financial due diligence. All right, we got that taken care of. So SEC is happy. Now with all that said, I know more than 9 out of 10 of those busters anyway, and all those licenses I've had, have had, okay? So we're not talking to Booby the Fool here. I'm well seasoned and well educated, but you gotta say all of that stuff if you're not going through all the SEC Securities and Exchange setups and whatever. So anyway, not gonna ramble on that. But let's start out with another quote here that if I can get to it. Bear with me, you guys. Here we go. Now this one right here is a little longer, but I just think full of relevance. Why have the secrets to creating and maintaining wealth to pass generationally remain untold to us? Question mark. It is absolutely clear that there is big business and profit to be made by keeping the system this way and keeping blacks in the dark. Simply told, there's huge revenue in ignorance. Oh! Let me repeat that. Simply told, there's huge revenue in ignorance. We're happily spending our wealth instead of protecting, building, leveraging, and passing it on to future generations. Collectively, we are spending on what we cannot afford, borrowing to acquire material goods, and paying inordinate amounts of interest to do so. Often, our doing so is both by choice and by design, as there are those who are disinterested in seeing a strong, thriving, self-sustaining Black community emerge. What is just considered to be benign capitalistic ideology, an economic system based on production of goods and services for profit, has actually had a negative and long-lasting impact on the Black community by siphoning much needed capital away from it. I tell y'all that all the time. We spend our money and it leaves. It leaves with business owners that don't look like us. This has resulted in a lack of resources and the demise of many black businesses and institutions that have been unable to compete with the scale, sophistication, branding, and funding of outside competition. Funding. How many black businesses do you guys know that actually even get funding? You know? I was seeing this thing. I try not to watch too much regular TV. If I have it on, I want to be learning something. Just call me weird that way or geek that way or whatever. But while you're calling me weird that way, also consider this. If you really are interested in changing the dynamics of your current financial situation and creating generational wealth, look at making some small changes, okay? Cut down on the amount of TV that you watch. Cut down on video games. I don't play video games. I have not played video games since my first daughter was born because my life changed and it got more serious. More serious. In addition, the poverty has produced high interest predatory lenders like check cashing businesses that offer payday loans and rent-to-own furnishing companies that further financially weaken our communities. The cost to economic support structures are all too prevalent. As an example, some analysts cite a poverty tax, where even items like standard grocery staples cost more in poor communities of color. Reverend Jesse Jackson called it a skin tax, where black people pay more to get less, work harder, and die sooner. We have been stuck in a money trap for hundreds of years with no answers, no leadership, no destination, and seemingly no end in sight. Man, it looks kind of bleak, doesn't it? It looks kind of bleak. But that's okay, how it looks. It doesn't matter how it looks. When we decide to acknowledge our greatness, and you guys are great. You've just been lied to for 400 years. You know, you've been told that you're inferior, and you're not. I promise you, you're not. So when we start to embrace and acknowledge our greatness, then we will solve these issues, these problems, and so forth. But until then, what we are doing is 1, 2, 5, 10, 15, 20 people at a time. We're feeding into you. You guys are getting that knowledge. And so, like I said, when you're done with this masterclass, you can fish, you can hunt. You don't have to worry about the man giving you a handout, okay? You'll be able to go out there and get it yourself. I hope that you guys are starting to see that now. When we talked about our credit class last week, I mean, that's real stuff, okay? And all your credit scores are gonna go up. Some of you guys are coming out to my office Tuesday morning. I got open office hours Tuesday from 1 to 6. Just show up out at the Black Lion corporate office, and we'll do hands-on. So some of you guys are coming out to the office, and whatever, you can come in and out. Just whenever it's convenient for you, we're gonna do hands-on. We're gonna get on the computer right there, and we're just gonna start doing things that we need to do to improve your credit, whether it's your 609 letters, whether it's going in, maneuvering in and out of the secondary bureaus, whatever it is. Yes?
We lost the audio a little bit. It's starting to get a little muffled right now.
Okay, do you have audio now?
Yep, we can hear you, it's just a little bit muffled.
All right, I don't know what to say. I haven't changed anything, so let's just
check the value.
let's hope that there's plenty there. So let's just hope. I don't know if Tony is out there now, but Tony Madsen is one of my most trusted friends, and he's also a board member of Black Lion. And he was out at the office today, and I was telling him, I said, man, sometimes I feel like they treat me almost like I'm Farrakhan or something. All these little mysterious things just happen where all of a sudden I don't have the internet connection or what happened. But anyway, let's move on. Can you hear me now? Hey fam, yeah, I was told that, that we lost sound for a while. Do we have it back now? Do we have it back now? Yes, okay. So let's move on. Study the Titans. Study the Titans. What I mean by study the Titans is one of the things that I like to do, I actually even enjoy it, is I like studying billionaires. I like studying billionaires because there's something that they did right to become a billionaire. And Lion YouTube channel. The reason for that is because it's been very, very evident that we need more investment knowledge in our community. It's been denied for so long, and so this is something that we really need. And so to withhold that is similar to withholding food from a hungry person. So we'll be fine, we can all eat. It's more important for more people to actually get and receive this knowledge. Claude Anderson, Dr. Claude Anderson, one of the economists that I study, he has a quote that I literally internalize every day. And this quote is one of the building blocks of Black Lion Foundation and Black Lion Investments. If you guys have followed us enough, you'll know that our logo is Black Lion, Financial Voice of the Underserved. In addition to that, our second logo is Black Lion, finally, someone on your side. This is what Dr. Claude Anderson says. He says, the root problem in Black communities across America is race and the unjust distribution of our nation's wealth, power, and resources. One race, the descendants of white Europeans, seemingly has checkmated blacks in an effort to improve themselves. White lives in privileged conditions with nearly 100% of ownership and control of the nation's wealth, power, businesses, and all levels of government support and resources. White society has a monopoly of ownership and control. This monopoly of control resulted directly from centuries of abusive exploitation of the labor of the darker race, Black Americans of African descent. Though Black Americans reside in the richest nation on earth, their standard of living is comparable to that of a third world nation. Blacks own and control less than 2% of the wealth, power, and resources of the nation. So they have little control over their power and resources, so they have little control over their lives and the conditions in which they are forced to live. Dr. Claude Anderson. And we're addressing that. I think everyone within the sound of my voice has seen this and has felt this. And we hear it talked about all the time, almost like it's a continuous loop of complaining, okay? Well, what we have in our efforts are towards solution. And the solution is to address that root cause. Always, it's economics and it's finances. Dr. Boyce Watkins, another mentor of mine. And you guys have some of his material. I hope you've been reading it, American Black Money. But the premise or the foundation of the philosophies of Dr. Boyce Watkins are three things. It's almost like it's your cheat code. It's in order for us to uplift ourselves, and we have to, okay? Because that's the only way that we will close the wealth gap, is we have to own entrepreneurship and investment. In other words, we have to own more things, because right now, we don't own very many things at all. You can go into any black community in the United States, any of the black districts, and you will see the businesses and the shops. They will be owned by Asians, Arabs, Jews, and so forth. Almost everything but African Americans in our community and in our neighborhood. And so what happens is we take and we spend our money there, and that money leaves our neighborhoods and our communities not turning over at all. And that's one of the reasons why we're going to have to get wiser and start investing in ourselves and start, as my friend Greg Singh would say, do for self. John Hope Bryant, another mentor of mine, I actually met him in an airport 2 years ago, and it was just the coolest thing. I couldn't believe it. Took a picture with him, but I read all of his books. Everything he writes, I look at. And as I mentioned before, I have certain economists that I study. Okay, those are the main three. And then from that, what I do is I formulate my own conclusions and my own concepts and plans. Did somebody say something? Okay. John O'Brien, the 5 pillars of black economic success, and it won't change. Our education, what he means by education, and I'm just going to roll through this fast because this is something that we'll revisit plenty more times. Education, and as far as college and things like that, that's great, get all you can, but if that's not available to you, get it wherever you can find it, okay? I haven't been in college in, going on almost 40 years now, getting closer to that, but I still study. I study every day, every week. I devour books, literature, all of that. We all have to do that. We all have to, because if you don't, literally what's going to happen and what's been happening is you just have to take the word of somebody else, and that's usually not a very good ending. But just devour all the education and materials you can. We're going to get into this a little bit later. We're going to talk about investments and how a lot of them work and things like that, and how you can demystify them and how you can limit risk and hedge and so forth. But even with that, you're still going to have some basic knowledge. That knowledge gives you confidence, and that confidence will be what will protect you. Understanding the numbers. Great quote, John O'Brien. It says, in America, African Americans live and reside in a capitalistic society without seemingly knowing or understanding the rules. It's like we're here, but we're just going through the motions. It's like we don't understand the rules of capitalism, okay? The ones in capitalism who benefit the most are the ones who own and the ones who produce. We, as people, are primarily consumers. We don't really produce anything. As Claude Anderson says so eloquently, about the only thing we produce as a race is sweat. we have the entertainers, we have the athletes, we have the sweat. And the last time I checked, you could not pass that down to the next generation. Part of the significance, the profound significance of what we're even talking about here tonight is actual generational change. If you listen to this entire presentation and you're focused, you should come away with enough information to get started on generational change. And it's not only just about you, but it's also about those that follow you, your children, grandchildren, and so forth. Self-esteem, that's an important factor. We're gonna have, and you know what? The harder we work, the more knowledge we acquire, that's gonna improve our self-esteem. It will. Our family and family support and mentorship. If you hang around 9 broke people, you're gonna be the 10th. So basically what John O'Brien says here is, of those 5 legs, you have to have a minimum of 3. If you don't have a minimum of 3 of those in place, it is pretty much impossible. It really is. So if you get 4 or 5 of those, you're well on your way to economic empowerment. Get our mind right, okay? Before we start doing anything, we gotta get our mind right. If we had, let's say, $2 million dropped on us tomorrow, okay? And if we didn't know what to do with that, before you know it, it would be gone. And we will live up to our nicknames that our Jewish brothers give us. And that is liquid money, because they say money just goes right through our hands. So it is important to get our mind right and get our mind ready. And we're gonna get more into things like that. A lot of times we want like instant gratification. So part of getting your mind right is having a plan. You're having an entrance plan. You're having an exit strategy and so forth. If you have a downturn, what's your plan? Are you just gonna freak out and panic? Because I will tell you, the number one thing that I see with people in their approach toward investing, and I've seen this for 30 some odd years, you know, since I first was educated on Wall Street, is that the primary concept in making money while investing is buy low, sell high. Human nature is just the opposite. We want to buy high and sell low. Think about it. Stock market's going up, everything's going up, it's record all-time highs. Matter of fact, there were some record all-time highs today. And get you all excited and juiced up. It's like, oh, I want to get a piece of that. I want to get a piece of that. All right, what goes up must come down. You're buying at the high, all of a sudden, this thing goes down. It's a correction, okay? And what happens? Oh my goodness, I'm losing all my money. I need to sell. It's like rats jumping off a ship. So you jump off, and then you have the professionals that come in, the Warren Buffetts of the world. Warren Buffett has made billions off doing the opposite of what amateurs do. When amateurs are selling, he's just buying. Anyway, so that's a part of getting our mind right. And also, you know, there's a difference between being broke and being poor. Being broke is just a temporary condition. If you're poor, that's a mindset, and it's like you still got slave dust on you. It's the mindset, and it permeates throughout all of you and all the things that you do and all the people that you affect. What we want to do is we want to condition ourselves to have what I call a wealthy mindset. Eugene Mitchell says, the wealthy teach their children how to acquire. The rich teach their children how to sell. The poor teach their children how to buy. Think about that. The wealthy teach their children how to acquire. The poor teach their children how to buy. So we want to flip that around. We want to flip that script is what we want to do. Investing is designed to look complicated. Think about it. You look at all of this stuff and it just It just looks complicated. And the reason why it looks complicated is because it was designed to do that way, to be that way. It was designed to look complicated so that you would do one of two things. One, either go down and give your local broker your money for him to do a mediocre job and enrich himself. Or two, not do anything at all, which is even worse. And we've done that way too much. We've done that way too much. You know, you hear this saying as far as Rome wasn't built in a day. Well, I prefer Timbuktu wasn't built in a day. You know, at one point back in the 13th century, Timbuktu and their king, Mansa Musa, was the most richest civilization in the world, the richest in the world. But that was not built in a day. So we got to remember that, is that the things that we build, we have to start planning, and we have to have some manner of patience. Some manner of patience. I mean, let's look at it this way. You guys have often I've referred to you as a snowball effect, where if you have to start small, that's fine. At least you started. You know, you start small, do well with that, and just let that grow. But the main thing is to actually get started. That is really the main thing. Learn to filter out the media, okay? Because the majority of what you're bringing in from the media is actually negative for you. It really is. If you did the opposite of what the media said, you'd be better off. You really would be. So learn to tune that off. And once you guys get that foundation and that knowledge, it will be easier for you to do. It really will be. One thing about investing is that the basics don't really change. They really don't. You know, times change, other things change. But if you think about it, the basics have been around for a long time. Let's go back to Warren Buffett again. Warren Buffett has certain disciplines that he's used with his investments, and he's done very well with them. And I refer to a lot of the strategies of Warren Buffett similar to the Packers sweep. And I'm not a Green Bay fan, I'm a Viking fan. But at the same time, I recognize greatness. Back when Vince Lombardi was a coach for the Green Bay Packers, they had what's called a Packers sweep. And the thing about the Packers sweep is it wasn't a surprise. Everybody knew it was coming. But the reason why it was so successful was the excellence in the execution. And that's basically what Warren Buffett does. It's just the basic stuff. He doesn't do anything fancy. If he was in this room right now and you say, Mr. Billionaire Warren Buffett, what's your secret? He goes, I understand compounding. I understand the magic of compounding. I have a children's investment book that is almost finished. Title of the book is Baby Judah Learns to Invest. And part of the book is Granddaddy says to Baby Judah, he's got flashcards, and he's saying, Baby Judah, compounding. And Baby Judah does this little dance, and he goes, my interest on top of my interest, make it more interest. Really, it doesn't have to be that complicated. We can teach our kids, and we need to start teaching our kids at an early age so that it permeates within them. And I'll tell you something else, that when that happens, the temptation for them to go out and just aimlessly spend money that they don't have, okay, benefiting people that don't even like them, and trying to impress someone that they don't even know and probably don't care about them. That temptation will go way down. Diversification. Baby Judah, what's diversification? Granddad, diversification is not putting all my eggs in the same basket. Very good. It's not complicated. That will never, ever, ever, ever change. Berkshire Hathaway, Warren Buffett's stock that he owns, go in and look, see what the holdings are. You know, if nothing else, what you will say is it is like extremely, extremely well diversified. You know, never put all your eggs in one basket, and that's your safety net right there. You know, because contrary to popular belief, there's no one that's got this magic pill or this magic formula where they can just automatically pick everything perfectly every time, okay? You're gonna be wrong sometimes, okay? And on the times you're wrong, it's important to where you've positioned yourself to where you won't get wiped out. And all you need is just some basic disciplines, and that will not happen at all. Asset allocation. Asset allocation is your risk profile mix, okay? Back in the day, it was literally fixed income, which are like your bonds and your things like that, your stocks, your equities, mutual funds, and so forth. And the less risky things, the older people get, the less the risk tolerance. I was just talking to a good friend of mine, and he was saying, man, I got this pile of money, and I gotta figure out something to do with it. Problem is I'm 70 and I can take no risk at all. And I was like, I understand. So somebody like that, they're not gonna be buying equities. They're certainly not gonna be buying crypto because they don't have the time horizon to handle the ups and the downs. Opportunity cost. Opportunity cost is if you buy this Microsoft stock, then you lose the opportunity to buy this Walmart stock. That's what the opportunity cost is. You got to make one decision, you make that decision, you lose the opportunity to buy the other. So it's just weighing them. It's the same thing we do on a daily basis, okay? If you buy, if you buy those new pair of shoes, well, maybe, which is the problem with most of us, maybe we lose the opportunity to pay our electric bill. All right? So let's be mindful of and have good judgment with our opportunity costs. Time in the market outperforms market timing. I wish I could just say that 100 times. You know, back in school, way back in the day, in the days of Moses. Somebody made mistakes. You know how the teacher has them right on the board, 100 times. I really, in our minds, we should write that 100 times. Time in the market outperforms market timing. 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 Okay, what that means is that what market timing is when you listen to TV too much, all right? And you think you're a stock picker, and you're sitting there and you're trying to time. All right, these are high now. Let me wait till they go down. Boom, I'm gonna pick that up there and I'm gonna sell it here. It just, statistically, you're going to the casino and you're not even playing a good hand. Time in the market is when you choose an horizon, and you choose that horizon in advance of how long you're going to stay in the market, or as we say, go long. Say if you're looking at stocks or equities or whatever, how long are you going to stay there? Because it is a statistical fact that the longer your time horizon is, the lower your risk. If you look at the stock market, for example, just through the years, you're probably looking at somewhere around 9 to 10% average total, okay? The thing about it is, it actually has been going up the whole time. Now, the problem is that it doesn't go up on a straight horizontal line, okay? It's more like an EKG, but it's still going up. And so for that person that has the discipline to stay with the plan and not worry about the downturns and the corrections, because we have certain things we can deal with that, he is still gonna win. He's still gonna win. Investment vehicles. Everybody wants to just hop to that right away. Oh, what about stocks and these ETFs I'm hearing about? And what about bonds? I don't hear that much about them before. And what's a REIT and what's a crypto and so forth. Let's just start number one, stocks, okay? All right, let's go back to Baby Judah. What's a stock? And Baby Judah says that means you own a small percentage of that company. So if you have Amazon stock, you own a small percentage of Amazon. So as Amazon does, if Amazon does well, theoretically you should do well. It's not really much more complicated than that. I mean, you have obviously a lot of stock valuations and things like that. PE ratios, all type of things that we definitely won't get to today. But basically it's the same thing as you running a business and your accountant coming in and he's going over the balance sheets with you and the income statements and all that type of stuff, and you're seeing how profitable you are or are not. It's just that with stocks, these companies are public. And so we can go in there and we can actually see how profitable that they actually are. Bonds. Bonds are what we call fixed income investments. What I mean by fixed income is, let's give you an example. Let's just say the city of Minneapolis, they're going to issue some corporate bonds, okay? Or they could be Minneapolis utility bonds and so forth, transportation bonds. Or there could be corporate bonds, okay? Corporations issuing bonds or whatever. Those bonds, basically, if you got $1, the bond's worth $1, and then you have what's called a coupon, okay? So it's whatever interest is attached to that, and that's a fixed rate. Now, obviously, people that trade bonds, the yield goes up and down and things like that. But as a general rule of thumb, if let's say if that coupon on that bond is 4%, that just means you buy that bond, and then if you hold that bond to maturity, you made 4%. It's not going to fluctuate from that. That's why they call it fixed income investments. And I will tell you right now, because interest rates are so incredibly low and have been for a while and probably will be for a while, bonds are out of favor. That's why it's a difficult situation, like almost like a trick bag for my 70-year-old friend, because he can't take any risk. But at the same time, fixed income right now, they're just not paying well at all. I mean, the treasuries are under 2%, they're not paying very much. So, and we'll get to all of that more later. ETFs. ETFs similar to like mutual funds, where basically you'll have a fund manager, and that fund manager is managing that fund. And so basically it's like he has a bowl, and in that bowl he can put various investments in there. If he wants to put some bonds, he can put some bonds in there. He can put stocks in there. And a lot of times what they'll do is they'll have other little things, what we call derivatives, like options and things like that. Well, they'll try to tweak how much that's made in there. So they all have different strategies. And one thing about them is that all mutual funds, they issue a prospectus, and you can go in and you can see who the fund manager is. You can see the 1-year return, 5-year return, 10-year return, etc. You can see their investment philosophy and all that. And you can also see the fee structure, okay? Because some have a higher fee structures than other. And, and that's something else to consider, because if it's got a high fee structure, a lot of times that will be significant as far as reducing your actual earnings, because part of that's being eaten up. But I will say this, is that more light has been shined on that over the years, and I personally believe a lot of the fees are not nearly as bad as what they used to be. I remember back in the day on the mutual funds where you had like the front-loaded funds and the back-loaded funds, and then later on you came with the no-loads, which the structures right now are set up kind of similar to the no-loads, but those front-end funds, they could be like 6-7% fee charge up front before you make a dime. I'm not making that up. And the back load's the same thing, except for it just pays on the back end. But a lot of those funds were front loaded. So how, as an investor, are you really winning on that? You know, if you think about it. REITs, Real Estate Investment Trust. I think REITs generally, you know, can be a pretty decent thing as far as just a hedge. You know, real estate, like they said, they're not making it anymore. And basically what a REIT is different real estates invested in, you know, that pot, that pile. Now, just like anything else, you'll have good ones and you'll have bad ones, because some of those will be invested in like commercial properties that are just flat out losers. So you gotta be careful on that. Cryptos, ho, that's why y'all tuned in, right? Huh? That's why y'all tuned in to hear about cryptos. Cryptocurrency, digital currency. You have several names: Bitcoin, Ethereum, Dogecoin, Litecoin. You have a lot of them. And basically, in a nutshell, just to simplify it the best that I can, is it would be what we call digital currency. For example, money, hand, that's fiat currency, cryptocurrencies, because some people get a good understanding of them early on and others don't. And I will tell you straight up, it literally took me 5 years of studying cryptocurrencies until the light went on. 5 years. I know some younger people, even in my family, that have been long on cryptocurrencies way before I even had it as a consideration, you know. Part of it may be like the millennial mind. If you think about it, a lot of our young millennials, they live digitally. I mean, when I was growing up, you wanted to have some walking around money. I mean, literally, you wanted to have something in your pocket. You never want to walk around with just empty pockets, you know, and it felt good if you had a roll in your pockets or in your wallets. Well, now think about it. Most young people you run into, a lot of times you'll see them and you'll go, hey, you got $20, and they'll look at you, you know, like you're a Martian or something like that, you know, because they're just so used to operating with digital currency. They're already, so some of those concepts, they actually pick up quicker. Okay, what's the elephant in the room there? We all know Bitcoin. Bitcoin's the elephant in the room there. And it's traded internationally, and the momentum has been very, very, very strong. The cryptocurrencies by nature tend to be volatile. Their beta is high, so they move up and down in wild swings. So if someone does not have very much risk tolerance, that's not going to work for them, okay? Because if that thing goes down 9 points, they're probably holding their heart, okay? But at the same time, it can go up 10 points, 11 points, whatever. I mean, the rate of return over the last 10 years on Bitcoin, for example, is averaged over 200% rate of return. Is that crazy or what? Over 200% rate of return. And Bitcoin is the most recognized one, and it's the one that, in my opinion, is going to be the most impactful. There's only 21 million that can ever be produced, and so that helps with the scarcity. You have some people that outright think that, oh, it's like invisible money, it doesn't matter. And you have other people all the way on the other side that literally think it's actually a better hedge than gold. So all the way around. But once again, you guys, do your research. Do your research and get comfortable with these things. Options, what are options? We gotta like go through that quickly, because options itself, literally, we could take months going over options. I mean, back when I was sent to school, finance school in my early days. When they were educating us on this stuff. And then, you know what, I bet we spent I know we spent several weeks just on that, just on options. But let's just give you the quick version of that. We're going to give you the baby Judah version of options, okay? So basically on options, you have calls and you have puts, okay? Calls are if you have a bullish outlook. In other words, if you think the stock's going to go up. Puts are if you have a bearish outlook. Either you think the stock's going to go up, or you want to, you think the stock's going to go down, or you want to protect yourself in case it goes down. So, a typical example of a call is, let's just say, let's pull up. Oh, here's one. GameStop. That's been in the news a lot lately. That's another story for another day. But let's just say GameStop. What is it, about 60 now? Something like that, after it went up to 400 and came down. So let's say GameStop is at 60, okay? And let's say you have some calls, what's called a strike point at 80, okay? You have some calls at 80, all right? Which basically means is that you think that stock is going to go up, all right? Now, if you have options, you do not own the underlying stock, okay? Now, the person who's selling the call makes the premium. The person who's buying the call pays the premium, okay? So let's just say it's, I don't know, $2, okay? So, and let's say they're September calls. Okay, so you're buying 80 calls, in other words, call for a strike point, and like, I'm not expecting you guys to get all this right now. We're just trying to go through some things really quick, just touching the surface. But it's September, so the strike that means if that stock hits 80 or above by September, you're making money, and you can exercise that anytime you want. Okay, you pay $2 per contract, which basically means they come in lots of 100, okay? So that means you're out of $200. You spent $200, and the person who sold the calls, they got the $200. You pay $200 for the right to own that stock if it passes 80. So let's just say the stock goes, woo, like it did last week, all the way to 400. Say, okay, you're like, great, good. I'll get out now, okay? So basically, in essence, is that even though you didn't own that underlying stock, since that stock went way up, you got all those profits, which is cool, but that's not something that happens every day. Now, let's just say the opposite. Let's say that you got those 80 calls for September, and the stock either goes down or goes sideways. It never hits 80. Well, that call expires, okay? You never exercise it, and so you're just out of your $200. So the worst thing that could happen to you is you lost the $200. Let's just take the other guy who sold you the calls, okay? Everybody on every side of the option, there's a buyer and a seller on every side of the option, and everyone is doing whatever they're doing for whatever their reason is. So like this person that sold it, he's probably thinking, you know what? This thing is around 60. It's been around 60 forever. And I think that there's a good chance that it'll never hit 80. So, and that happens a lot. And so he's like, hey, that's an easy $200 in my pocket. And I'm still, if the stock is paying a dividend, I'm still getting a dividend. Plus I still actually own the shares, and I'm getting that premium in my pocket. All right, let's just say what happened last week happens, and the stock goes to 400. Well, that guy didn't lose any money because he actually made money, because he made money from 60 to 80, okay, times 100. All right, so he did make that money, plus he made the premium. But as far as like the unrealized gains, he didn't get to participate in that. So when it went from 80 all the way to 400, He didn't get that. So that's one of the reasons why you want entrance strategy and an exit strategy, because whatever you decide, you need to be content with it. So this guy could have a couple different approaches. He's like, you know what? I made pretty good money on this. I can't be mad. Or he can be like, man, look what I could have had. So whatever it is that you're after that makes you happy, you just have a plan for it, okay? Because changing on the fly, I promise you, does not work. I promise you, does not work. You know, all the market timers and the day traders and things like that, and that's fine. You know, you got some people that do a lot of the day trading and so forth. Some of them do well, but I will tell you, the vast majority of them do not do that well. I know a whole lot of people that got started with day trading and all of a sudden, you know, they're back to, you know, a regular job after a few months. It's kind of like gunfighters. You see some good gunfighters or hear about some good gunfighters, but you don't hardly hear about very many good old gunfighters. And that's like the day traders. You have some good day traders, but you don't see that many old good day traders. It's really not worth it. If you don't have a crystal ball, then, you know, limit the things that you're trying to predict and hedge yourself. By all means, hedge yourself. So anyway, let's just try to fly back through just a little bit more of these options, okay? Okay, let's go with putts. Okay, here is what I think is a good way to just kind of internalize putts, okay? And some of the just basic strategies I have, as far as I'm concerned, came up with this particular way to look at it, and that is I call them Warren Buffett putts, and I call them Mark Cuban putts, and I'll tell you the reason why, okay? Because Warren Buffett, and they're both billionaires, so that means that there's money to be made on both sides. So Warren Buffett putts are, he is selling the putts. And so what I mean by selling the putts is, remember, a putt you think the stock's going to go down. So he's selling the putts. So in other words, he's getting a premium. That money's getting paid to him. So remember we were talking about that $200 premium. He's taking that and he's putting that in his pocket times however many contracts that he purchased, okay? And a lot of times he's doing that, well, he is always doing that very intentionally. And his thinking is if he's done the research on the stock, which he has, and he is determined that he likes that company, okay? Well, if he likes that company and there's a crash in the stock market, he doesn't care about the crash. And the reason why is because it's still a good company. If the stock market crashed tomorrow, Amazon is still a good company. If the stock market crashed tomorrow, Alphabet, which we know as Google, is still a good company, all right? And so the way that he looks at it is he's done all of his research and he knows that they're good companies, and he knows in the long term they're gonna be just fine. So the way that he views it is, so if it's, let's just pull a number out of the air. Let's just say it's Google, and I don't even remember what Google's trading at right now, but let's pull a number out of here. Let's say it's trading at 2,500, okay? So, well, maybe he has some putts at, I don't know, 2,200, okay? So, basically what happens is the person who sold the putts, if there's a crash and it goes all the way down to almost nothing, then that person protected himself like insurance, okay? And they're out at 2,200. That's all they lost. They minimized their losses. Well, you take the person on the other end, like Warren Buffett, the way that he looks at it is, you know what? If I liked it at 2,500 per share, I love it at 2,200 per share. So if it goes down, I'm comfortable. I'm actually comfortable. And so it goes down, and he owns it at $2,200 a share, and he's made billions doing that, okay? Let's take Mark Cuban. Mark Cuban, everybody thinks he's like the crazy man. He's the owner of the Dallas Mavericks. And he does some things unconventional, But what the average person doesn't know is that Mark Cuban, at this time in his life, he is not an unconventional investor. I would say he's a conservative investor. And Mark Cuban has a lot of money, and he has a lot of money in the market. So if you're already rich and if you're already wealthy and you have money in the market, what is one of the main things that you're concerned about? Is it growth? Growth is great, okay? But the main thing that somebody like Mark Cuban is concerned about is, I got these billions, let me maintain these billions. Let me hang on to them, okay? Let me hang on to them. So something that he does regularly, almost all the time, is he will actually sell those puts. Okay, so he's paying Warren Buffett that premium. Because as far as Mark Cuban is concerned, that's his insurance. He looks at it as like, I'm buying insurance. Just like we buy health insurance, we buy life insurance. He's like, I'm paying that $200 premium so that if all hell breaks loose, I don't lose everything. And so basically what happens is that stock goes down to 2,200. Mark Cuban's not the owner anymore. Warren Buffett is the owner. Mark Cuban is okay with that because he had a plan. He knew what he wanted to do. He was content with that, and it had grown from, just a little minnow all the way to a whale. And he was with it the whole way up. And so if it dropped down to 2,200, you know what? He still made a whole lot of money. He's happy. Warren Buffett's happy. The risk on that strategy, like Warren Buffett's, for example, is if you're selling those puts, then what happens is that stock goes all the way down to zero. You own them at zero. Now, a guy like Warren Buffett, he's not worried about that. People that don't have money, they can worry about that a lot because that can wipe them out. But anyway, as you know, when we get into this further and further and further, you guys will be a lot more comfortable with that. And I really didn't mean to spend much time on it at all, but just to get your feet a little bit wet on it, really. Let's go through just a couple more things real quick, and then we'll open up for questions. The stock market indexes. We hear about so often. The Dow Jones Industrial Average, blah, 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 blah. And so what do we think? We think, well, that means that it's all the stocks in the world, right? And that's what they're doing, right? The Dow Jones Industrial Average is really only 30 stocks. It's only 30 stocks. It's 30 large cap stocks. And it is how they're doing from day to day, week to week, month to month. But that actually is what the Dow Jones Industrial Average is. And it changes from time to time because back in the 80s, Walmart was not in the Dow Jones Industrial Average. Now, if you guys know the Walmart story, it kept growing and growing and splitting and growing and growing and splitting and growing and growing and splitting. And after a while, it's like, you know what? They can, they have to put it there. So down the road, you're probably looking at stocks like probably Google and Amazon may get added at some point. But anyway, that's not that big of a deal. S&P 500, Standard & Poor's 500, so that's 500 different companies. And NASDAQ Composite is, I forget the exact number, it's like 374 companies or something like that. And it's tech weighted. A lot of the tech companies are traded on the NASDAQ. So a lot of the people that are into technology and invest in technology and so forth, a lot of them pay much attention to what's going on with the NASDAQ Composite. And then the Russell 2000, there are 2,000 of the smallest stocks in the Russell 3000. So they're all what we call small cap stocks, small companies. You know what? I just want another quick quote, and then we're going to open up for questions. This is a quote from John H. Johnson. If you want to know how people feel about themselves, look at their bank account. Money is the greatest measurement of your mindset. Wealth is less a matter of circumstance than it is a matter of knowledge and choice. of knowledge and choice. Wealth is less a matter of circumstance and more a matter of knowledge and choice, because a lot of us go, oh, I don't have anything, I can't do anything, I can't. You know what? Let's get the knowledge and let's make the choice. George Bernard Shaw: the greatest evils and the worst of crimes is poverty. Our first duty, a duty to which every other consideration should be sacrificed, is not to be poor. Dennis Kimbrough, he's on our book list. Hope you guys have been reading that. This guy is, he's a sharp guy. The poor keep score by cars and clothes. The middle class keeps score by degrees and titles. But the wealthy keep score by their bank accounts. Dennis Kimbrough. All right, what questions do you guys have? Questions? Floor is open.
The first question is, will we receive the presentation documents?
Say that one more time.
First question is, will we receive the presentation documents?
Like which documents? Like the agenda, itinerary? What do you mean?
What was the notes from tonight?
Well, I'll tell you what. One thing that we are doing is, I mentioned this at the beginning, is this is actually going to be downloaded on YouTube tomorrow morning, which is something that we have not done on any of the other master classes. And we're doing this in 10. Okay, so it's like, you know what? If he liked Microsoft up here, he really likes it down here. You know, and he's not concerned at all about daily market news. Not at all. Not at all. It's not an emotional thing to him. And we talked about earlier, as far as get your mind right. Well, you know, that's part of it, as far as getting your mind right. Try to make it less emotional. You know, try to make it less emotional. My father was a quarterback, and he raised sons as quarterbacks. I grew up as a quarterback. My father tutored me. My brother Willie grew up as a quarterback. So you're like, what's that? Well, the point of it is, if you're a quarterback, and you got to remember, we're from little kids on up, okay? There's certain things you have to learn as a quarterback. The quarterback is the leader of the team. So if something is going south on you, you got a downturn, you can't freak out. If you freak out, everybody else is going to freak out, okay? The quarterback has to be composed. Look at Tom Brady. What's one of the main things that they say about Tom Brady is he's composed. Joe Montana, what they say, he's just a cool cat. All kind of things can be going on around you, and how are you going to react? You know, are you going to freak out with the rest of them? Or are you going to be calm and make good judgments and good decisions? So my point of it is let's be quarterbacks, you guys. You know, so if they're coming around us and they're swiping at your legs or going by you or whatever, or they're coming in your face or whatever, you're still going to have to be composed, even with chaos going on around you. And my goodness gracious, chaos is going on all around us right now. And even now, think about it. I mean, we have choices. Okay, we can freak out and go give up, okay? So let's just go get drunk and get high every day because we're giving up. Or we can decide to sharpen our saw during this time. You know, study, invest in yourself, learn, grow, okay? So that when the time comes, you're ready. You know, you're ready. If you stay ready, you don't have to get ready. So anyway, choosing stocks. Everybody wants to talk about that. And y'all be careful, okay? Fool around and get to know a little bit and go crazy. Please don't do that, nobody, okay? But I will say this, is not as complicated as you are led to believe, okay? Some of my basics that I look at when choosing a stock is, first of all, I want to know what's their story. Just like we all have a story, all these companies have a story. What's your story? Okay? 2, earnings history and projections. And I mean, that's not, sexy, nothing fun about that, but do your research and find out how profitable has the company been, not been, what are their projections, and so forth. Look at all of that. Basically, you're looking into their books. They're a publicly traded company, so guess what? It's all available, and the stuff you can learn to understand it. If you did nothing but had CNBC and maybe Bloomberg channel playing in the background part of the time while you're at home, and maybe pick out a publication like Barron's. I subscribe to Barron's. And my wife was like, all your Barron's is here again. And she's like, should I throw it away? No, don't throw that away. No. Ask her, she'll tell you. I like Barron's. And if you read that stuff, guess what? After a while, it starts making more sense. It really does. It's volumes of information, but we got catching up to do. And nobody's going to come and save you. So you're going to have to do it yourself. And you guys are all capable of doing that. But it's not absolutely necessary. So like say, for example, if you don't want to choose the individual stocks or whatever going in your plan, that's cool. Go buy a little bit of Kathy Woods' ETF or something else. Who was I talking? Anthony, earlier today. And he was like, hey man, I like those cannabis ETFs. I'm like, yeah, bro, I do too. But hey, and some of y'all, it's going to be like the Peter Lynch thing. Invest in what you know. But do your research and make sure that you're comfortable with it. Okay, another thing with choosing stocks, moats. Okay, back in early civilization, fairly early civilization or whatever, a lot of the castles, as a defense mechanism, they'd have these moats around them. And basically what these moats were is they were like deep and wide trenches filled with water and sludge and so forth. And it was meant as a protection barrier. So if you had another invading army coming in, it's like, okay, man, we gotta, before we can even get to them, we gotta figure out what we're gonna do about getting across this moat or whatever, what are we gonna do? And so the wider a moat was, the harder it was to cross. And the deeper it was, the more dangerous it was, okay? So if some of your horses fall in the moat and it's deep, they're gone. So companies, what kind of moats do the companies have? All right, so I don't know, this was not the plan for Tesla to keep coming up, but Tesla's got serious moats, all right? One of their moats is the fact that all these electric cars, they need these chips, okay? And they buy them from other companies, okay? Tesla got to the point to where they produced their own chip. Woo! You guys remember Lysol? How come they couldn't grow? Okay, they couldn't get enough ethanol, So Tesla, they control it. They don't have to worry about somebody just cutting them off. That's a serious moat because they're the only manufacturer that can do that. Here's one for you. Chipotle. This was kind of cool. Chipotle, this is their mode. What Chipotle does before they go in and construct one of their restaurants is they go into the local areas and they form relationships with the local farmers, okay? And they form relationships, and then they're guaranteeing the farmers are gonna buy a certain amount from them. And they actually cultivate those relationships. I mean, so, basically part of their pitches, they say, hey, if there's something that you need help with or whatever that we can help, you know what, we'll come by here. We'll even try to help you. They build that whole relationship and they grow that relationship, okay? So that when you go into Chipotle, the ingredients, supposed to be fresh and locally sourced. And that's part of their branding. And they're doing pretty well with that. And the reason why that's a moat is, let's say if you take a company and they want to come in and compete directly with them, well, it's difficult to go in and get the same type of support with the farmers because Chipotle beat you there, and the farmers have no incentive for offering any kind of deals to the new company. The farmers might go, well, Chipotle supported us all these years. If I have some extra, maybe I can sell it to you, but the price is going to be double, okay? So they created a pricing moat there. Those are moats. And then plus, given the fact that they built a relationship. I mean, you guys know that I was in finance for years and years and years. And when I was with Wall Street firm, literally a weekly basis, these fund managers would come in and they're pitching us. It could be AIM, or it could be Franklin Templeton, or it could be Fidelity, or MFS, or whatever fund they are. The rep is coming out and he's like telling us, oh, we're doing this and this and this and this, and trying to get us excited about it so that when we call our clients that we're going to pitch their funds, okay? But and then even in the car business, all the banks and the credit unions and the finance companies, they come through my office all the time. Well, let me tell you what we're doing. Let me tell you about some of our rate special. And they come regularly, and so what they're doing is they're cultivating their relationship. I mean, there was a point in time where literally, if I needed tickets, okay, Viking game tickets, Twins tickets, whatever, literally, I could get on the phone and I could call one of these reps and I could be like, my kids are gonna be in town, I need 4 tickets, or I need 6 tickets. What can you do for me? Break their neck, working it out. I mean, they break their neck and, to come in and deliver them. Now, does that happen as much now as it used to? No, because after 08, you had that crash. Things that they did were looked at a lot harder, but it can still be done. I mean, there's plenty of times where my kids have been in town, and there's been 6 of them to the Viking game. And I am a season ticket holder, but that's only really for just 2 tickets. So where I get the other 4. So things like that. So anyway, if they're coming to my office all the time, and if I need something like that, boom, they got the tickets. And plus, it's kind of hitting a little spot in my heart because my kids are coming in town. These guys gave me tickets so that I could take my kids to the game, okay? And so you got a new company coming in. I don't know them. They don't know me. And they want to get in the way of this company I have this relationship with. Come on. What am I going to say? No, that's all right. We're good. We're good. And so that's a part of Chipotle's moat. Moving on down, let's whip through this thing real fast. Technical charts, y'all not ready, but we'll get there. We'll get there, and then before this is over with, you guys will be able to look at technical charts and you'll be able to break down, ooh, that's a support and that's a breakout and all of that stuff, okay? But sleep test. What I call the sleep test is ultimately you guys should get to the point of whatever it is you choose to invest in, make sure that it's something that you're okay sleeping with. Cora asked me earlier about Robinhood. You know, that was some skunky stuff they did, okay? And a lot of people are not going to be comfortable sleeping with that. It doesn't bother me. That's not a sleep test issue I have with them. I know it was skunky, but you know what? I'm an old dog. I've been around the block. Yeah, that's what happens. Skunky stuff all around us. So it's just a matter, you know, how much of it, you know, you can, you know, exist with and how much you don't want to deal with. But just how well do you sleep? I'll give you an example. Here's the latest example with me. This company called Neil, and you can say, oh man, James, he knows a lot of stuff. Yeah, I do, but also I know not to get too full of myself, and I know that there's no such thing as perfection. So a lot of it is just managing and hedging our downside so that our mistakes are minimized. So there's this company called Neil, and they've been getting just all these reviews have been crazy. Neil is an electric car company in China. And so I'm thinking, I know for a fact, China is the giant in the room. I know that. And they are, I'm telling you, China is just doing big things. Matter of fact, they are the largest holder of American dollar than anybody else, and American treasuries, China. So don't sleep on them. So I know big things are going on over there, and I'm thinking, okay, in China, and then, you know, all these analysts are saying all these good things. Neil, this electric car in China, blah, 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 blah. And I didn't buy much. So I only bought a little bit of it. So I'm like, let's see. And you know, it's interesting. And who knows, maybe one day that company might go crazy. It really might. But it's one that I'm not going to hold long term, even if it goes crazy, and I'm okay with that. Because it doesn't pass the sleep test with me. And what I mean by that is, I know how dominant Tesla is in that industry, for example. And I don't even have that much of Tesla, and I'm never going to get probably that much of it because, you know, I'll be honest with you, Elon Musk, he doesn't pass the sleep test with me. Some of the stuff that he does out there, you know, I don't really get and I don't understand. And so, whatever. You know, everybody's got a different flavor. But the reason why I didn't pass the sleep test for me is I'm thinking, as many years as I've been in that sector, I ain't never seen a halfway decent car come out of China. Never. I mean, cars coming out of China are brutal. Cars coming out of Russia are brutal. Okay? The Germans make good cars, the Japanese make good cars, and even Korean cars, they're coming on, but China? And so it just didn't pass the sleep test for me. So anyway, I'm gonna zip through this real fast. Matter of fact, philosophies. By now, I hope you guys know, I believe you have to have a plan and plan for some time, okay? Some time in the market. You guys, you know, go into it thinking at least 3 years or 5 years, and if you can devote 10 years, you can't even lose. If you can devote 10 years, that's like the sweet spot in the market. You got to be an idiot to lose money or just out there just half-cocked, like the baby with the bazooka, just doing crazy stuff. I mean, if you stick to your basics, you cannot lose 10 years if you have a 10-year horizon. You guys know how I feel about diversification, all that other kind of stuff, and don't get too greedy. Pigs get fat, hogs get slaughtered. And remember, if you stay ready, you don't have to get ready. Questions. What questions you guys have? Sorry, we're going right up to the time tonight, but you know what? We had a lot of meat today. And we had a lot to cover. What questions you guys have?
Are there black-owned hedge funds?
Say that one more time.
Are there black-owned hedge funds?
I would imagine somewhere. Yeah, you can always Google it and research it. I would imagine somewhere. I'm sure. And I can't recite like a particular one right now. Sorry about that. But the way that I look at, did we have that? Hey, pull up that John Hope Bryant quote, Martin, if you can, where he talks about the new color is green. That really, where I am right now, to be honest, I mean, you guys know that I'm buy black, be black first. But when it comes to investments, I'm green, okay? So if I'm going with a fund or whatever, their color don't have nothing to do with it. There you go, that John Hope Bryant quote, as far as the new color, 21st century is green. It's gotta be. It really does. So no, but if I find one and if I like it, I'll do something. But I'm sure there's some somewhere. But I tell you what, even though I don't have any that I like follow on a regular basis, there are some other cats out there that I follow, because even though they don't have the experience and the background that I have, some of those cats have just kind of have like it. I'll give you an example, and I've mentioned this guy before. He's a straight up, I mean, hardcore, straight up, off the streets off the dope king. Dude's name is Wall Street Trapper. But I like him, man. I like him. So you guys can like go and see him on YouTube and so forth. This cat, he was a trapper. I'm sorry, God, at some point you think I would remember the dude's name, but he goes by that moniker, Wall Street Trapper. And he was in jail, and he was in jail in the hole with a white guy who had embezzled $2.8 million. And Wall Street Trapper was in there for, I don't know, something stupid, right? And the white dude told him, he's like, man, y'all playing the wrong game. And it's like a light bulb went on. So when Wall Street Trapper got out, what he did was he just devoted himself to studying. And he will be the first one to tell you he doesn't know everything, but what he is he's a very good student. I mean, he started out he didn't have Barron's or anything like that, so he just started out reading the money section in USA Today, and then he just kind of went on from there. But he's actually a pretty good stock picker. And you can listen to him a little bit, and some of the stuff that he says makes sense. I don't know if he knows this, but a lot of his philosophies are based on the principles of Peter Lynch. Because basically that's what Wall Street Trapper does. It's like, you know what? We buy this, we use this. Let me research and see about that company. And he's just learned to understand and read the financials and things like that. So now this guy is monetized. So you can get a little bit of free stuff from him, but not that much. Anything else, he wants you to pay, for his stock picks and all that kind of stuff. And I'll tell you, I mean, I like the guy, and I like the way he's monetizing it and all that, but I'm not gonna like pay anybody for the stock picks, because I'm gonna tell you guys, most of the time they're not even gonna outperform something that you pick. Next question.
How do you approach saving versus like investing?
That's a great question. First of all, I think they're both winners. And that's the main thing that we have to do, is to acknowledge the importance of actually saving. So to me, the primary difference is savings you have in an account, and in theory, it should be gaining interest and it should be compounding. The issue is right now, the savings account rate that they pay you is less than 1%. which doesn't even keep up with inflation. So technically, you're losing money. So you pretty much, you know, if you don't want to go backwards, you have to invest. And so if you're going to invest, you should invest in yourself, in learning, because there's a whole lot of opportunities out there. Okay, Kathy Wood, you know, Art Fund, what, 174% last year? Bitcoin has a rolling 10-year average of over 200%. That's like crazy. So there's opportunities all over the place. Google, Tesla, all these companies, if you would have got in, you know, kind of early, even at the midpoint, you still would have made a killing. Next question. Any more questions?
I have a question for you, James. This is Jordan.
Hey, Jordan.
Hey, how do you know, like what kind of percentages of percentage is different, or how can you look at that information depending on who you go with your investments? Like what kind of investment return, like, the minimum should be like, you know, to start now?
You're saying what type of investment return should you look for? Is that your question?
Correct. Like, or like what kind of, and what's the minimum percentage, you know?
Okay, that's a great question, Jordan. You guys, let me tell you something about this guy. I have not known him for a long time. I mean, so I put it out there, hey, you guys get this masterclass, blah, 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 blah. Dude came in, paid his little fee. You guys know it's a little fee. Right now it is. That will change. Was smart enough to figure that out and had enough discernment to invest in himself. And like I said, I haven't known him for a long time, but I will tell you this. I'm betting on him because his brother is a sponge. He's a sponge. And he's smart, you know. But anyway, so Jordan, get back to that, is today was just the first one on investments. And that's why I call it demystifying it. It's taking that cloak out. You know, it's not so scary, okay? Because it's really not, you know. Don't go for the, you know, the head fake. And so today is just the first one because, you know, you can't just like go from A to Z in one session, okay? But on the next investment session, one of the things that we will be doing is we will start to build portfolios, okay? And so when you're building portfolios, you're building what type of things do you want to put in it, okay? And so when you put in it, what's your strategies? What's your entrance strategy? What's your exit strategy? What's your profit-taking strategy? What's your risk tolerance? And so by the time we're done, literally, you guys will have the ability to go in, get on your computer, do your own portfolio plan. It might be 2 or 3 type pages, but what that plan will do is it will lay out your basic principles. You know, I'll give you an example. Some of my basic principles is I'm not a market timer. I'm going to be in the market in time, okay? I'm going to profit take, and I'll profit take at certain points. Okay, here's one for you. I'll just give you an example of profit taking. Let's just say you start out, I'm going to pull a number out of here. You start out with 10,000 and you're rocking it, okay? And that 10,000 quickly grows to 50,000. Okay? And you guys' portfolios will. It will. If it doesn't, that's because you're hard-headed and you won't listen. But if you listen, it will. So you go from 10,000 and it grows to 50. All right? So let's just say a part of your plan was you're going to do profit taking once it's 5 times. Okay? So what you do then, this is not what you necessarily do, but this is just like one of the different concepts, is when it gets to 50 or whatever your target is, you have your predetermined target, you're taking 10 out. You take that 10 out, okay, you take that 10 out and you put it somewhere else. wherever you want to put it, it doesn't matter. You put it somewhere else. So in essence, what you've done is you've hedged it. The original amount you put in was 10. You ran it up, you grew it, you took that 10 out. Now you're on house money. You can't lose. No matter, you can get like totally just stupid and you still can't lose at all because you've already taken out everything that you put in. So from there, and it should relax you more too. You should sleep a little bit better also. So all those different little things we'll do, and we'll find out, for example, on derivatives, options. Everybody has a certain level of comfort with derivatives, okay? I have never been a day trader. Can I teach day trading? Yeah, I can, okay? But I've never been a day trader, and I've never been an options trader, but I use options as a hedge. Now, some of you guys will be more aggressive with it. Some of you guys will be less aggressive with it. But the way that I look at that basically is when I don't have that much in the market, I am more aggressive with it, because if you don't have that much and you get aggressive and it goes down some, it shouldn't be that big of a deal. Now, if you get to where you're like Mark Cuban and you got billions and billions and billions, I hope that your strategy shifts to one of protection. And that's why Mark Cuban constantly sells put contracts constantly. He knows it's going to cost him a little premium, but he's okay with that because he'll know that he can't go to zero. Next question. Any more questions? No more questions. All right. So, okay, go ahead. Mm-hmm.
It's a little off topic, but it's financials.
Mm-hmm.
What do you think about being your own bank using insurance policies?
Being your own bank using insurance policies. Like explain that a little bit more. You're saying not putting any money into regular banks at all? Is that what you're saying?
Yes, sort of. I was approached by somebody on a financial deal,
Mm-hmm.
and their thing was they use, I believe it's whole term insurance policies. You buy, you pay the premium, you put a little extra in, and then you can take it out and use it and pay it back to yourself with interest.
Okay.
And
Instead of using the bank.
yeah, and your original amount stays the same even
Right.
though you took it out.
Right.
Do you think that is a vehicle?
Okay. So if you wouldn't have had that question, I wouldn't have said anything. I wouldn't have interfered. Okay. But since you asked me that question, I have to just give it to you straight. And trust me, my years. First of all, what I want to say is that I am an advocate of insurance. Black people in general are underinsured. In all my young lions coming up, we haven't gotten to that point yet. At some point, we're going to have to address that. And I'm just going to let you know right now. Once you guys get started, we start building some of these portfolios up, maybe over 100,000 or whatever, you guys need to have a lot of insurance on yourself. You need to, I'm talking $1 million, plus on yourself. And the reason why is because you have not reached your full potential yet of where you're going. You haven't reached that yet. And I just view it as being selfish of not thinking about the generations behind you. As a people, I hope that we are going to be not so selfish, and we should do some planning for them. And we should think about that, sometimes just some of the decisions we make. Okay, do I want to, buy another pair of Jordans, or do I want to put a little something in my grandson's fund or trust, and so forth. So generally speaking, I am a big believer in insurance as a people. We tend to be a little underinsurance, but the reason why I like having large insurance policies for some of you young and up and coming sponges is because when you crunch the numbers, it is a cheap way of guaranteeing your seed generational wealth. Think about that. It is an inexpensive way of guaranteeing your seed generational wealth. Say you got, say you're, I don't know, 24 and healthy, and you're on your way up, and you buy $1 million policy. Maybe most of it's term. The premium of that, I haven't looked, but it might be, I don't know, maybe $150 a month for $1 million policy. Probably not even that much. Okay, think about that. You're paying $100 to $150 a month, and the thing about insurance is why people don't get excited about it is because it's not tangible. You can't feel it, you can't touch it. But for paying that amount, basically what's happening is if you don't realize all that potential where you're going, something weird happens. And you die early or whatever, and you got little kids. Guess what? They're still taken care of. So when you think about insurance, you shouldn't think about it just from a selfish perspective. Now, with that said, I've seen all the various policies and buy, whole life insurance instead of a bank account. That's bunk. Okay? So whoever your agent is, he's probably mad at me. But my job is to tell you the truth. That's bunk. Do we like banks and all that? No, we don't like banks. And we know, and it's kind of like the Robin Hood thing. We know they're getting over. Okay? But it's difficult to manage in daily society without them. I mean, I can take a check now, just like you guys can, and I take a picture of it, and boom, it's in my account. That don't make any sense. Hang on. No, I got plenty in charge. I'm telling you, there's not a logical reason for it. Did we do anything different? Unplug or plug anything differently?
You didn't do nothing different, no.
Can you guys hear me okay now? Okay, so think about this. Now, I'm going to just chalk this up to just odd circumstance. I'm going to do that. But think about this, is that during slavery, okay, you still can't hear me. All right, try muting and unmuting. Okay, let me try that. Hang on. Let me try that. Hold on. Hey, Jordan, can you try to mute and unmute me and see what happens? I mean, not Jordan, I mean, Martin. Okay, all right, so okay, so what we did was we muted and unmuted. Can you guys hear me now? Say something, somebody.
You sound like you're in a tunnel. At least to me, you do.
It still sounds that way? It's interesting. I haven't done anything differently, and I just find that this is interesting. Well, you know what? No, we haven't changed anything as far as what we had plugged in or not. This is unusual.
I think there's an update happening right now because it completely bumped me out and I had to come back in. So it could be that as well. I'm not sure.
Let's, you guys stay where you are. I guess most of you guys probably only have one phone or computer there. I mean, I could let's do this and see what happens. What I'll do is, and I really didn't want to do this because I wanted to control the production, but I'm thinking about maybe just going Facebook Live until that picks up some. What do you guys think about that? Well, even that's funny. So there's something weird with the internet connection right now, and I don't understand it.
I wonder if you should restart.
restart.
Like restart either the app or restart your computer.
You think that's gonna make a difference?
I have no idea.
Yeah, I would say leave and then come back in, but you're the host, so I don't know. That might shut off all out.
Let's do this.
So it won't shut him out. So James and I will try that.
I'm thinking about, Facebook Live until that gets better. Martin, what do you think about that?
You're better right now.
What's that?
You're better right now.
I'm better now? Okay. Hey, well, okay, let's get going before they try to stymie us again. Sounds okay now? Okay, so we're talking about the Titans. And what I call the Titans are, some billionaires. There's a lot of them. And so, admittedly, there's some that I think are just whatever. What did our parents say? If you don't have something nice to say, don't say anything at all. So, won't say much at all about them. Hedge fund manager, Melvin Capital. Okay, let's go to ones that I like for different reasons. And no one else has to like them, but I like them, and there's certain things about them, and I don't have to agree with them all the time, that I like. And so basically I got a handful of them that I picked and I followed. And I literally, if they came out and said something yesterday or whatever, I probably know what they said, what they're referencing, because I respect what they have to say. And that's something you guys can do. Just start reading up on some of these people and just kind of decide if, wow, that makes sense, that makes sense, that makes sense. And if you get to the point where you like, you know what, I respect this philosophy, so let me continue to follow it. And they can have different philosophies, like the ones that I follow, they all have different philosophies. So let's start with my favorite. My favorite is Cathie Wood. Cathie Wood is the hedge fund manager of what's called ARK, A-R-K, hedge funds. The particular one that she manages is called their Disruptive Innovation Fund. Ooh, think about that. Disruptive Innovation Fund. So basically, what disruptive innovation is the next big things. For example, at one point, the internet, that was a disruptive innovation, okay? Because it's something that you can see coming, and it's gonna be coming, it's down the street and it's coming up, and what are we doing to prepare for it? Are we just gonna wait till it's here and wait till it runs all the way up till this high, or are we gonna kind of get with that a little bit earlier? Okay, for example, and with all these people, literally, there's so much that is disclosed. Like, you know everything they're buying and everything they're selling and all that. And I look at that. It's called whale watching. I'm looking at what they're buying, and sometimes they'll say why they're buying it. And, being an old dog, I think the years have helped me as far as discernment is, are they buying that because they really believe in it? Or are they saying one thing and doing another thing? And the reason why I like her is she's not a liar. And I said this previously, is that the majority of hedge fund managers are liars. She's not a liar. I haven't caught her in one yet. And so when she's telling you something, she's really thinking that. Now, whether it's right or wrong and whether it hits or misses, she really is thinking that. So I'll give you an example as far as in innovation. Tesla, the electric cars. Think about that. At one point, that was a disruptive innovation. Okay, so Tesla is like, whoo, oh my goodness. It's just made so much money, and it started as nothing. I mean, literally, if you would have started out when Tesla had nothing and you put in $1,000, you would be a millionaire many times over. So it's all out there for the taking, guys, if we're just aware of these things. But even now, even though Tesla, what is Tesla at right now? Can somebody Google that to see where it is? Or hang on, I'll check real quick. Even though, and it's probably close to a market high. Here we go. Tesla right now is at, looks like it's at $8.52 per share if I'm looking at that right. Okay, and it is split several times. So, you know, you start at $1 and now it's $8.52 per share. If you got enough of those, you've done well. Interestingly, even now with Tesla running all the way up there, that is still her largest holding. And I'm like, wow, that is really interesting. And sometimes some of these people, like for example, Kathy Woods, I just like her style. I mean, I like the fact that she had the guts to be positioned long in Tesla really the whole time, and she still is, and so far she's been proven right over and over and over again. And you know, in a moment of transparency, that Tesla run, I missed it. I'm not going to sit here and lie to you. I missed the Tesla run. I was not on that. And I have a lot of years in the auto industry, but I still missed it. Now, this is the interesting thing, is that automobiles, the combustion engine that we've all been so fond of, the days are numbered. They just are. The days are numbered. And this crazy dude, Elon Musk, you know, the CEO of Tesla, has been proven right. People have been betting against him for a long time. He's been proven right and right and right and right. Now, do I own Tesla now? Yeah, I own a little bit, because after a while, you just kind of have to recognize, you know, I own a little bit, but I don't own a lot. And I probably never will own a lot. I mean, it's like the opportunity cost things. You have to make your decisions. I don't own a lot of it because I didn't want to buy a lot of it while it's high. And also, you know, me and Elon Musk, even though I think he's like a baller, we can't really sit down and have coffee. You know, we just can't. I just don't think our personalities would mesh that well. And that's fine, because there's no wrong or right on that. And what's going to happen, you guys, is once you finish this masterclass and you start getting your feet wet and all that, you guys will find your own way. You'll find certain things that will make sense to you, that you'll gravitate to and understand, and things like that. And I mean, a lot of my investment decisions are purely unemotional. I don't dislike Elon Musk. I don't dislike him. I don't like him. I just don't really get him. So the fact that I don't really get him, I'm like, I'm not going to throw that much of my money. I'll throw a little bit, you know, because you've been killing it, but not that much. But anyway, getting back to Kathy Wood. So, okay, you got things like artificial intelligence, all of that type of stuff. She's looking at it and she's on it. Her fund last year was up 174%. She's cold. Now, is it going to make 174% every year? No, it's not. Okay, it's not. Okay, if she makes a third of that, that's still real good. That's still real good. And some of the type of things that she's doing, let me put it to you this way. We got a segment called what Uncle James is buying. I apologize for not putting that in there because it was actually written a while ago. I've been buying that. I didn't buy it originally because I'm like, oh my goodness, it's up. She was up 174 last year. It's got to come down. And then I just started reading more and more of her stuff and so forth. and when she comes on YouTube, I'm seeing what she's got to say and so forth. And I like her story, I like her philosophy, I like her principles. And so what I'm doing now is I'm dollar cost averaging. You know what, we skipped right over that earlier, dollar cost averaging. So let's go back to Baby Judah and with the flashcards. So Baby Judah, tell us about dollar cost averaging. So what Baby Judah says is that it's continuously investing a consistent amount regularly, whether it's weekly or monthly, so that when the market is up, you're buying less shares, but when it's down, you're buying more shares. And that's called dollar cost averaging. And guess what, you guys? Remember when we talked about that zigzag? The market goes up, but not straight up. It's a zigzag. Well, when you're dollar cost averaging, you're zigzagging in effect. It's like straight like that. My oldest daughter, Dee Dee, I started dollar cost averaging $25 the day you were born. So dollar cost averaging is real. And you can do it to where it feels like it's not even hurting you that much, and the compounding and so forth, which is one of my base principles. I won't get away from that. I'll never get away from diversification and asset allocation, of course, also. But so I've been like dollar cost averaging into it. And so even if it does dip a little bit, it's fine, because long term, I believe her story. Even the things that she says about Tesla, she's like, even as much as it is now, it's going to go a lot higher. And I'm like, what? And then she started talking about things that I actually know of. And she's saying because the combustion engines are going to go out eventually, because there's a lot of pressure on Ford and General Motors and Chrysler, because they're so heavy into these combustion, and they're getting dogged out. They have to revamp. And that revamping costs a lot of money, and it takes a lot of time. General Motors just came out, do not quote me exactly on this, but I think they said like 2035, they're gonna be like mostly electric, which is like an aggressive target, but still, basically, it's like Tesla's the white people, and it's like General Motors is the black people. The white people are way ahead. So like General Motors gave Tesla a big head start. And I'm just talking facts, because I don't even like electric cars. But, what's that? Somebody say something? I'm sorry. So anyway, she thinks it's gonna go way higher than what it is right now, and she's probably right. She's probably right. I'm not saying go out and buy Tesla stock. I'm not saying that at all. So do not, please do not mix them up. But just the courage to say something like that. And also as far as like artificial intelligence, Tesla's done a whole lot of work on that also. And something else that we'll get to. Did we, okay, yeah, we'll get to that a little bit later when we start talking about moats. Tesla's got like some serious built-in moats. But so anyway, I like the part of the market that she's working in, investing in, that she's an expert in, and I like the way she goes about things. Another Titan that I study, and I've been studying this guy for, oh man, over 30 years. I started, a long time. It's Peter Lynch. I started studying Peter Lynch back in '91 when I first got my Series 7 securities license. I've been studying him because he was the king even back then. Now he's retired now, but the thing about Peter Lynch, and he's got several best-selling books out, is that his thinking and his analysis is just so very sound. Peter Lynch was the one who originally came out with the philosophy of buy what you know. Think about that. Buy what you know. That's profound. Okay, let's give you an example. All right. Some of you guys know Hennessy, woo-hoo. And Louis Vuitton, woo-hoo. And what's that top line champagne? What's the name of it?
Rose.
What's that?
Rose.
No, the top line. What'd you say, Jody?
Okay.
No, the top of the line.
Carry on.
No, it's higher than that. It'll come to me in a minute. But anyway, it's very expensive. And Louis Vuitton, woo, y'all knows Louis Vuitton bags. So check this out. That's what some of y'all know, okay? Guess what? The same company owns all of them, all right? So if that's something that you know, and you look, whoa, the same company owns all of them, what you do is you just start to study it. You study it, and you look at their financials, you know, and their earnings statements, you look at the management, all that, and we'll get into all of that later, but you start studying it, and you may decide, okay, this makes sense to me. So maybe, you know, you buy that, all right? Some of y'all love Nikes, all right? Well, Nike makes a lot of money, all right? That's something you know. You go into Walmart, even during the pandemic, stuff is flying off the shelf. You see that, you're there. You see it's flying off the shelf. You go back and you go, well, let me just study Walmart stock. Well, let me tell you something about Walmart stock. I'm trying not to spend too much time on this. I have personal history with Walmart stock. I started out as a financial consultant in Little Rock, and back in the early 90s. And back in the 80s and the 90s, Walmart was growing like crazy. I mean, crazy. Almost kind of like what Bitcoin is doing now and so forth. Maybe not quite that much, but like Google's done and so forth. But it was growing crazy. Constant growing, spending. You didn't have to know anything about investments at all. You could have done anything. All you had to do was just buy Walmart stock, and just accidentally you would have been a millionaire. I kid you not. I kid you not. Some of you guys know the Danny McAllister story. I'm not going to go into it now, but you know, I was a young broker. This cat worked in like shipping and receivings at Walmart, and they were putting what's called the employee stock option program off his checks every week. And he had no idea. I called him, thought he had a $1,800 IRA account, and he told me, well, you know, he's getting ready to retire soon, and they told him that on that ESAP he's going to have to roll it over and make a decision. So he sent it to me, and this, you know, country dude from Hope, Arkansas had over $1 million in Walmart ESOP stock. Over $1 million. That is a true story. And that stays with me, because even now, some of these that have run up and we're like not believing and not believing and not believing, and well, when are we going to start believing? And being a human, that even happens to me. Tesla. I wasn't believing, running out. I wasn't on Google right away. I'm on it now, and I'm going to stay on it. But I wasn't on it early, and just things like that. And Microsoft, some of you guys know I don't like Microsoft. I don't like the owner of Microsoft. I have a little bit of the stock because I know it's solid. So anyway, that was Peter Litch. He's like, buy things that you know, and particularly in the beginning, okay? Because part of it, and I'll get to this later, is whatever you do, make that decision, and part of it is so that you sleep well, really. And so it could be anything like that. You're thinking, oh, I'm noticing this, I'm noticing this. Go back and study it and do your homework and see how comfortable you are. Now, sometimes you'll notice something and you'll go back and you'll do your homework and you'll go, okay, well, I'm not going to go there. Okay, I'll give you an example. Lysol. Lysol, you think, man, you can't even get that now. It stays off the shelf. Let me go check it out. I did that. So I'm like, let me go see who made Lysol. okay? Because they must be killing it. So Lysol is made by this company over in England, okay? I don't even remember the whole name. But this company over in England, and it's true enough, is as fast as they can make it, it sells. But this is the thing. This company is not a real big company. Their scaling is limited. You need ethanol in order to make these sprays, and guess what? The big whales are preventing them from getting more ethanol, so there's only so much that they can make. So even though every can of Lysol that they make is sold fast, they don't have the ability to scale it enough, quick enough, and big enough to really make a lot of money. And so after doing that homework, I'm like, okay, you're not going to worry about them. So that's a part of demystifying investments. You guys, it's complicated. You know, I'll give you an example of why it's not that complicated. Index funds have been popular for the last several decades. And the reason why it's popular is because more and more of the population have been privy to the basic information of that the majority of analysts and brokers and financial consultants and hedge fund managers do not outperform the indexes. Isn't that crazy? So in other words, if you just buy an ETF or a mutual fund with the S&P 500 index, all right, and whatever profit it makes is what you're going to make, because they're not picking, they just got a little bit of each fund in that index. The majority of stock pickers don't do as well. They don't. I mean, so sometimes it's almost like throwing darts. So if you pick out a company and you do your research, you're probably not doing worse, really, than all these experts that are making money, whether you buy or whether you sell. The main thing is to do your homework and have your checks and balances in place, because if you're sticking with the basics like your diversification, dollar cost averaging, asset allocation, you know, there's only so much that you can get hurt, and it's almost like you can throw it at a chart and we'll be okay. And remember, the main thing is just really getting started, because that's the main issue with us. But getting back to the snowball effect, we get started, you know, we are very talented people. Think about it. Anything that we decide that we're going to focus on, we master it. Okay? Why are there so many great black athletes? Because that's what we support and that's what we master. Why are there so many great black entertainers? That's what we support and that's what we master. So let's get to the point to where when our kid tells us that you know, he's been saving his quarters and he's built it up, and the compound interest, he can see it growing. How about we reward him that? So we talk about the Baby Judah books. I got a lot of underlying themes in that, and part of the underlying theme is, and you guys, the book will be out on the 21st, is that Granddaddy rewards Baby Judah for things like that, for the fact that he's really learning about responsible investing and things like that. And so he's you know, peeling off a couple dollars to Baby Judah. Baby Judah's getting excited. Huh? How about a little bit of that for our kids? You know, have some flashcards, the right answer, you know, peel them off a couple dollars. Nothing wrong with that, because the way this is what black people own. They don't own businesses. They really don't even own any land. They definitely don't produce anything. And as, for the most part, you know, and as Dr. Claude Anderson says so eloquently, what black people produce is sweat. Sweat. All right, you guys, sweat's not going to help our upcoming generations. All right, so moving on. Ray Diallo, if you guys have been doing any type of research at all on any of these big billionaire hedge fund man, and Ray Diallo, I think he's basically he's like pseudo-retired now, billionaire, multi-billionaire, and he ran the Bridgewater hedge fund, which I think has more assets in it than any funds in the United States. So just given that alone, you know what, you got to give the guy some props. He can't be stupid, all right, to do that. So you know what? When he talks, I want to hear what he has to say. When he has a book, I want to read it. I want to get inside his mind. And I'll tell you something else about a guy like Ray Diallo. If you really research and study him, he actually has good character, which is the opposite of most hedge fund managers. This is a white dude, rich billionaire white dude. Do you know one of the things that he's actually focused and working on right now is closing the gap, the racial wealth disparity gap. He don't have to do that. This dude can go to the beach every day, and he ain't even black. But he acknowledges that, and he acknowledges that, you know, you can't just continue to be a thriving society and you continually have the rich getting richer and the poor getting poorer and the rich oppressing the poor more and more and more and more. If you guys study the various civilizations, it gets to a point where it starts out, it's pliable, okay? And when it gets too bad, that breaks. And all these rich people here that were very comfortable oppressing all the poor, you know what? Like I metaphorically say, you can only keep your knee on our neck for so long. Okay? You cannot do that forever. As a matter of fact, if it wasn't for that, you guys wouldn't even be hearing me now. Because all my little Wall Street knowledge and stuff, you know what I would be doing with it? I would be going out, doing my own thing, keeping it within myself and my family. I'm just telling you the truth. Okay? So when that man, that animal, put his knee on George Floyd's neck for 8 minutes and 46 seconds, 1 block away from where I grew up and played sports at Phelps Park, it was too much for me. And I had to decide that day, what am I going to do about it? So this is what I do. I fight. I fight every day. What do? I go out there and fight with guns, knives, and bricks? No. No, that's not how I fight. That's not my weapon of choice. This is my weapon of choice right here. My weapon of choice is my brain and my knowledge, okay? And so one of the guiding principles of the master class is taking 60 years worth of this accumulating knowledge and not dying with it. It's passing it on to any of you guys that want to accept it. You know, if you guys are willing to put in the time to invest in yourself and to be a sponge, I'll transfer it directly to you. Ask anybody in my mentorship group. I will transfer it directly into you. Now, if you don't want to, that's cool, because I am my dad's son, and like I said, he said it thousands and thousands of times, son, you can't help somebody that don't want to help themselves. So I don't really spend a whole lot of time on trying to convince people to listen to the knowledge. But when I can see that somebody is committed to investing themselves and absorbing it, the people that know me, they know that that's my pride and joy. All this young group that's coming up now, you know, the Black Lion Mentorship Group, I mean, I'm crazy proud of them. I know a lot of them are still growing, but I'm like crazy proud of them. I am, because I can see what they're getting ready to do. And that's not just talk. And something else about it, and they know this. If they don't know this, they should know this by now. My phone's open all the time to them. If they call, I will answer. Even if I can't get to it right then, I will call them back. I don't care how busy I am. And if they show up, we'll put hands on them. We'll go do whatever it is they need to do, whether it's help with their business plan or anything else. All right. So if they're sponges and if they have the initiative to invest in themselves, that's what we grow. And what we do it is just a little bit at a time, you know, and that's our approach. Because one thing about it, all you guys, when you're done, will they still be oppressing black people? Yes, they will. They just won't be oppressing you. Okay? They just won't be oppressing you. And as time grows, more and more and more will figure it out. And hopefully have some encouragement to start being proactive. So anyway, Ray Diallo, he's a pretty bad dude. And obviously that fund is done very well. So, you know, when he talks, I want to hear what he has to say. And he said something I thought that was quite courageous about a week or so ago. I thought it was very courageous. And they asked him about Bitcoin. And we'll, when we have more time, we can get into more deeper into like the cryptocurrencies and things like that. So Bitcoin, really, if you want, you know what, that is a disruptive innovation. You know, go back to Kathy Wood. That's the definition of Bitcoin. It's disruptive. Don't have time to go into all the different ways, but it is. And remember, these are billionaire hedge fund managers made all their monies in other ways. And so pretty much their script is they got to tell you, oh no, you know, no, that's voodoo or whatever, right? You know, that's kind of what they're supposed to tell you, okay? And the point of it is while they're telling you that, they're going in, they're doing their research, they do their research. If they get to the point to where they're comfortable about it and they see that it's going to work and it's going to grow, they still tell you, oh no, that's terrible. And in the meantime, what they're doing is they're layering positions. They're building positions of it. They're going out and they're buying it. They're trying not to buy it in too big of blocks because they don't want the market to move too much. And once they're well positioned in it, then they tell you, oh, I know that because remember, I was inside. Jerry, you had a question, something about Morgan? I didn't catch you. As far as the platform, I didn't see it.
I was just tacking on that. That's what Chase Morgan did. Is they were telling people that Bitcoin's bad, but he was behind the scenes actually purchasing a ton of it.
They all do.
What's their job?
Remember, bro? I worked there. I was inside. You're not gonna see hardly anybody like me, all right, who was actually inside telling you anything. You're not. Tell me somebody you know that was inside and is talking to y'all. Name me one. Come on, I'm waiting. I got a little time. Name me one. All right? So most of the people y'all see on YouTube are just high school graduates. Okay? And some of them are clowns and some of them are actually pretty sharp. Some of them are. So I'm not judging. But how many people that have been on the inside, that's Wall Street educated, that's talked to you? Nobody. They don't let them talk to you. Okay, that's the whole point. But yeah, that's what they do. So anyway, but we were talking about Ray Diallo. So we know what he's supposed to do according to the word track, all right? But this is what he said. He said, I think that Bitcoin has a lot of potential to be a hedge against the dollar. What? That's like blasphemy. You got this billionaire hedge fund manager that said something like that. That's like giving Bitcoin like some serious credibility. You know, all the other hedge fund managers probably was just blowing up his phone, probably leaving nasty voicemails. But what I'm saying is, this guy had the courage to say the truth. Another Titan that I like is this guy called Mike Shannonstein. He is the CEO of Grayscale. Mike Shannonstein. He's the CEO of Grayscale Trust. You guys Google that, because they got there early. Google Grayscale Trust. And they are doing, at least they're not lying about it. They're doing all that they can to corner as much of the Bitcoin market as they can. But at least they're not lying about it. And so what they're doing in essence is going out and they're buying a bunch of it and they're packaging it in ETFs. And those ETFs, they resell so that certain places and institutions and things like that cannot go out and buy a cryptocurrency because of the compliance issues and the regulations and things like that, they can still invest in it doing that way. Woo! It's the old around the end thing. And Grayscale was smart enough to figure out how to position themselves that way. Mass Mutual is huge insurance company. And insurance companies have big piles of money, and they have to invest those monies, and they have to preserve them and grow them. And they really have to preserve them, because think about it, okay? Life insurance company, you got a $1 million life insurance policy, you die, okay? Well, that insurance company has got to pay that, all right? So they got to have the funds available. So what happens to their funds, it matters. And so that is a highly regulated industry. I mean, there's certain things, high risk things that have high betas, you know, like cryptocurrencies and things like that, that by law they are not allowed to buy. Because think about that. Let's just say if they just start buying a bunch of high risk investments and they tanked, okay, and grandma dies and her insurance needs to be paid off and they can't pay off grandma's insurance because they got too risky and lost their money, it's a problem. It's a big problem. So they're really highly regulated. But Mass Mutual, right now, they're buying big blocks. Shoot, if somebody calls me, you know, or something, I need this, I'm like, boom, 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 just send it to you, you know. So as far as insurance replacing banks, I'm never gonna do that. I'm never gonna buy that. I think it's crazy. And it's a way, so what happens with insurance is, and keep in mind, I'm pro-insurance, all right? But what most insurance agents would do is they're trying to sell you nothing but just whole life policies first. Like I said, there's a place for everything. But what whole life policies does, you know, is it pays a good commission, okay, to the salesperson. Nice, good commission for the salesperson. I mean, you have some permanent insurance. It's not horrible, but let's not get it twisted, okay? It's insurance is for insurance. It's not for banking. You know, I hope that makes sense. Next question. No more questions. All right, cool. You guys get something out of this tonight?
Absolutely.
Well, cool. I went, technically, we're supposed to be done at 9, and on the Zoom, I got optimistic and thought 8:45, it's 9:04 now, so I went a little over, but I don't feel bad because I know that this was needed. I know that it was needed. And so we'll have, you know, a couple more on just investments, but also what I've decided to do every week is to fold something on investments in, okay? So that you guys can gain more and more knowledge and get more and more comfortable. Because remember, week number 16 is 3 ways to make $1 million in 10 years. All right, and you're like, oh, whatever. That just sounds like these big yellow journalism headlines that get you roped in all the time. No, I'm serious. So by rolling some of this in each week, then it really just enhances your knowledge. So by the time we get there, you're gonna be like, yeah, we talked about that before. Yeah, okay, cool. All right, final chance. No more questions? Michelle, have a blessed, thank you. You guys have a blessed weekend too. We will see you Tuesday at 6 o'clock, and I promise you I won't go over. But like I said, today we had a lot of meat, okay? We had a lot, and plus we were kind of stalled for a while. I don't know, some type of internet connection or something like that. But you guys, congratulations once again. I mean, think about this. You guys committed 3 hours of a Friday night to invest in yourself. And I did it that way on purpose. I intentionally scheduled it for Friday night so that we could get used to not viewing Friday as just partying, but Friday as far as investing in ourselves and thinking about our seed. Okay, as far as generational wealth. So all these problems we hear about, they're real, but we got the answers. We got the answers. Okay, so you guys, I love all you guys. Be blessed. Stay blessed. Pray for me, and I'll pray for you. All right, love you guys. Peace out. Thank you. Good night, Jordan. Let's hit that strong spot.